Hi, welcome. I am Sarah D.
I'm Dr. D.
And we are here with conversation number 106, an economic conversation where we are going to discuss the stimulus package's effects on inflation. Maybe we'll get into the bonds. Maybe we'll get into, we will. We're going to get into the making money out of thin air. Ooh, who has that magic wand, right? Wouldn't you like that one? And fiscal and monetary policy, a lot of really fun, good stuff. But we're also going to really discuss just a little bit this in here. Can you tell what this is by looking at it? These are some stones. These are some rocks, some stones, I guess they call them river stones. And I spent some good money on these river stones. Did you know that, Dean?
I'm sure.
It was good money
I'm sure
as
it
opposed
was.
to bad money. And if the stimulus package, instead of being a check for cash that you could use for cash, if it were for these stones,
You
would
mean dollars, right?
Dollars, yeah. Is that
Okay.
kind of not the same? No, different term.
Mhm.
Oh, thank you. So if your stimulus check had not been for dollars, representing an amount of dollars, would you have taken it in stones? I mean, they're cool. What do you think? Would you?
Well, stone is 14 pounds.
It's a measure of weight, too. You're right. It is 14 pounds. It is 14 pounds. Okay, so the reason I'm asking that question is because we've also talked about Bitcoin. And Bitcoin, to me, is like those stones. Somebody could decide those stones have a lot of value, and some people could believe it and spend dollars to get those stones because somebody made them believe it was worth that much, that many dollars. And so somehow, man, it's not just computer programmer. It's like man, this guy's got to be an amazing salesman.
Well, I think, so it served a purpose.
What purpose did it serve? Or does it serve?
Well, its primary purpose, so if I engage in illicit financial behavior, if I sell people or illegal guns or illegal drugs or armaments to countries that I'm not allowed to sell, so if I engage in illegal activity, and that's the way that I prosper, if I take dollars in payment, or almost any currency, it doesn't matter, if I take dollars in exchange for it, I have to somehow make those dollars legitimate. And it's very, very expensive to do that. I have to turn those dollars into something that I can use. I can't just put them in the bank, because if I put them in the bank gets all pissy about it, right? And so I have to somehow convince the United States that those dollars were generated through legitimate processes.
And somehow Bitcoin did that?
Well,
Or does that?
we call that laundering money. And
We've talked about that before, too.
if I'm a money launderer, I'm going to charge you to clean your money. And I might charge you about half of it. Right? I'm going to charge you a significant fee because I can it's not a legal thing to do. I can get into trouble for it.
Right.
So I'm going to charge you to launder your money.
Good risk.
Right. I'm going to charge you to launder your money. And so therefore my profits when I sell my illegal drugs are cut down when I try to turn my money into legal money.
Mm-hmm.
And so what if there was a cheaper way to play that game?
And that's what Bitcoin.
Bitcoin has been very good at that.
And so with it being good at that, one of the reasons it was good at that is because the ledgers the money wasn't real traceable.
Right.
The
and
coin was not really
the
traceable.
Bank,
The Bitcoin bank.
the Bitcoin bank
Right.
didn't deal in dollars directly and therefore didn't have to worry about government regulation.
Okay.
And the government is what regulates, the proper use of the currencies. So it was used that way. So you could use it I could use it to buy slaves. I could use it to buy,
And that's why the American government has a lot of Bitcoin, is because it's actually learned how to
trace it.
trace it And so, like the Silk Road?
Silk Road is a good example of an exchange that traded in
Illegal,
Bitcoin
and it used Bitcoin as its currency.
as a currency.
Even
Yes.
though it isn't a currency.
Right.
And the reason it isn't a currency, because it doesn't hold its value across time.
Right.
Its value is volatile in great amounts.
Mhm.
So even, I mean, you'd say this stone isn't worth anything, but Bitcoin could be worth as much tomorrow, for all we know.
And the other thing is that if, again, when you think about legitimizing your dollar, you face an inflation rate of 50%. That is, in order to get my $10 bill, so I have a $10 bill that's illegitimate, and I have it cleaned, and they give me back a $5 bill. So I used to be able to buy 2 Big Macs with it,
Right,
and now I can only buy 1.
right.
Right, so the same $10 bill in a very real sense to the person engaged in. So you don't have to be very stable.
In order for people to trust you.
Well, in order for it to be better than the laundry method.
But now that Bitcoin has gone down in value by 50%, it's about par with laundering money.
Right, so
So maybe some of the illegitimate services, whatever, maybe they'll be
Right.
less likely to trust it as
so
well.
that is a concern, right? That is a concern that they would have. A
Yeah,
concern
yeah,
that they would have.
Yeah, that Bitcoin would have.
Yeah, that people transacting in Bitcoin would have is that it's going to face incredible inflation.
Okay.
And it has faced incredible inflation
Okay,
and
but-
deflation, both.
So here's another question. So if you got a stimulus check, or if you got stimulus checks, would you have been willing to accept my stones here for the stimulus check? Would you have trusted that it had value enough, or that you could use it for exchange? Or would you have trusted Bitcoin? I mean, they could have given you, $1,000 in Bitcoin, and then, oh no, tomorrow it's only worth 500.
And
Would you have trusted that?
that's essentially what happened.
Yeah.
You look at the last stimulus check when it came out, and you look at how much purchasing power a Bitcoin had, and then you look at how much purchasing power it has now. It's dropped about 50%.
But the money, the dollars have not.
No, they've dropped about
About
7%.
7%. So still, inflation is a thing that the stimulus checks have had a play in. Is that
Yes.
correct? Okay. So should we go to the making magic money?
Sure.
Okay. They really don't have a wand. I'm going to try to explain it to you a little bit.
All right.
I'm going to teach back, even though I really don't know much to teach back. The Federal Reserve is the private public agency that has this magic wand that can make money be in your checking account,
In somebody's checking
in
account.
somebody's checking account.
We'll talk about who's usually.
Okay. Or make it disappear.
Yes.
But they don't do it randomly
No.
or willy-nilly. The reason they do it is to maintain currency value
Right.
as close to on par as possible. With the COVID stuff, it ended up being 7% inflation. And the other one is to help ensure full employment.
Yep, those are the two things that they exercise monetary policy for. And monetary policy is specifically increasing and decreasing the money supply, the amount of money that's out circulating in the economy.
Which is mostly digital.
Most of it, yeah, almost all of it's digital.
Which I don't even know why people would want Bitcoin. We already have digital. But anyway, so where does the money go? Who do they give it to? What is it? What is that even? That's confusing.
Okay, so the technicality of it is really, so who does it go to? The government or to a bank?
Okay, and
As
the
a
government-
general rule, that's who it goes to.
So it would go to the government so that they could, say, make the stimulus checks. That
Right.
might be a reason they would use
They
it.
could do it that way, yes.
And you said the government or who?
A bank.
Or a bank, and they would give it to a bank so a bank could loan for
More
houses?
money. Yeah,
To house-
exactly.
so people could still
That's
get loans
exactly
for their
right.
houses. Because without maybe the stimulus packages and without you being able to buy a house, even though COVID's on, and you've got everything saved up for a house, the bank wouldn't be able to have that money to spend. So the bank was given that money. It's not given that money so that they can be all high la-di-da. It's so that they can help you.
Yeah.
We have to have some trust. I think sometimes we think the government's out to get
The
us,
bank
but
can't
of course
spend it as profits, so to speak.
They can't spend it as profits. What
No.
they have to do, they have to loan it out.
They
It's-
loan it
it's
out to make,
earmarked.
right, they loan it out to make profits on the loans.
And so you said it was, I said it was because you told me before that it's a private public agency, meaning that, what does that mean?
So, in a very real sense, it's a bank. So think of it as the Bank of the United States.
Okay.
And it's private-ish in the sense that it's not owned by the government. It's
Okay.
owned by the banks.
Oh, it's owned by the banks. Okay.
But all of its leadership is appointed by the executive branch and then approved by the Senate.
So they share the
Yes.
oversight and the success?
Yes, and failures.
Yeah.
Absolutely.
Yeah, you can't have one without the other, right? The whole up-down thing. All right, and that's called monetary policy because
Yes.
they're massaging money
They're massaging money. Yes, it's called monetary policy.
and also helping with the employment, which is also a money thing. How do they do that?
Okay, so if we think about this, if I think that not enough people are employed,
Okay.
right, that means that the amount of stuff that the American people are buying, that they are actually buying, is not enough to keep all the people employed. We're buying too little.
Oh.
And therefore, I'm not employing you because I could make stuff, I could use you to make stuff, but the American people aren't buying it.
Okay, and also we're not chipping enough out or something too. Not only the American people, right?
Well, it could,
Maybe
right,
it's
it could, right,
Oh, whatever.
right.
We'll keep
You
it
can,
here.
you,
We'll
right.
keep it
We
small.
keep it here because it actually the big is here.
Okay.
Exports and
Keep it
imports
big.
are small. The
Alright.
big is in here,
Okay.
right? So we're not buying enough stuff, and so the question is, how do you get people to buy more stuff? And the Federal Reserve,
You lower the price, right?
well, you can lower the price of stuff, but the company would have to cut everybody's wages to lower the price.
Okay.
So, how do you buy stuff? What do you use?
I usually use my credit debit, my
Yeah, credit debit card. And so if you're a person who uses your credit debit card and pay off the bill every month, then this isn't going to do much for you.
What isn't going to?
This whole monetary policy process.
Really?
But if you don't pay it off and you carry a balance over,
Even on a credit card, just regular credit card,
what do you end up paying?
you pay interest.
And so the price of what you're buying, the price of your bottle of water, is the price of the bottle of water plus a month's interest,
Yeah,
right?
I know. It's
Okay.
a rough place to
So
be.
I can cut the price of this by lowering the interest rate.
Yes, you can. And then you don't even really have to do anything with the money. So they influence,
Right. So how did I lower the interest rate? And that's what monetary policy does.
they lower the interest rate.
But they do it by increasing or decreasing the amount of money in circulation. Not in circulation. The amount of money, the supply of money in the economy.
Because that puts pressure on to cause the interest rate to go lower.
Or higher,
Ooh.
depending upon what you do.
Economics,
beautiful.
Economics is all about pressure.
It's all about pressure. Yes.
It's economics.
It's all about pressure. That's a
Okay.
good way to think of it.
Did you hear that? I got an A for today.
You got an A for today. And we can talk about credit cards, but really, when you think about it, where does it really matter? So what happened when interest rates went low? What happened to housing?
People were buying houses.
But how do you, okay, all of a sudden I'm buying more houses because why?
Because the interest rate is low and you'll have to pay less over, say, your 30 or 15-year mortgage.
Right, so you're looking at your mortgage, and your mortgage has two pieces. I pay for the house, and I pay for the interest on the house.
Yes.
Right? Okay,
Yes.
so those are the two pieces that I've got in my mortgage.
So this is less then.
Right, but so this is less, but in order to get more people working to build houses, what has to happen on the price of the house thing?
It has to go up.
It went up. But if the price of the interest
It's
goes,
the whole pressure thing
oh,
again.
there we go.
And even kind of like one of the lawyer things, a balance.
Yes.
Right? One of those things
Yes,
too.
absolutely.
Yin and yang and all this.
Yeah.
Oh my
And so we can
goodness.
talk about it in terms of houses. We can talk about it in terms of firms building new factories. They go, gee, I want to build a new factory. I've got an old factory and it sucks. And I'd like to replace it with a new one. So the interest rate goes down and I can borrow money now and I can afford to replace my factory.
So
So now I'm hiring more people to build houses and build factories. Yeah, beautiful.
so the magic wand people, the Federal Reserve, they're in service of us.
Absolutely.
They are not in service of themselves. I mean,
Right, they have-
yes, they have an income.
They have
I mean, it's a job. They do get a paycheck.
They have two things to do. One is to keep the value of the currency steady, and the other one is to try to maintain full employment.
And Waller,
Chris Waller.
Chris Waller, he's the one you built a deck for, right?
Yeah, long ago and far away. I built the deck
He's
for
on
him.
the Federal Reserve now. And
He's a governor.
he's a governor. And
He's a
my
big-
husband
big-
built his deck back in the day. Isn't that so cool? We're almost famous.
Almost.
So, can I
We'll have to send this to Chris Waller.
We'll have to send this to Chris Waller. and you're supposed
Well,
to...
give it to Ike Brennan. He talks to Chris Waller all the time.
There we go. There we go. So, yeah, and you're supposed to say, no, we're not famous. I'm supposed to say, you're just being rude.
I am just being rude.
That's an inside joke. Our granddaughter thought she was... Anyway, that's for you. That's for you, Ashley. Okay, so we have covered Federal Reserve. We have covered... We don't want to use stones and don't recommend using Bitcoin. It's not solid. Possibly it could get to be solid.
Do you want to ask me how they make more money?
I do.
Good. That's what we should finish with.
Thank you.
Or make less.
We didn't go there, did we?
No.
I'm glad you're looking at my notes. I wrote some notes down. Thank you. Yes, please help me.
Okay.
How do they? Didn't you explain how they make more money and less money?
No, I just said they did.
And it's not the magic wand thing. Sorry.
It is a magic wand, yes.
Okay. All right.
I like to think of it as a magic checkbook, but that's not it either.
Okay.
So
how
think
do
of
we
it
do
as a magic checkbook. That's the best way.
Okay.
So your checkbook, the bank, you write a check in it, and the bank, or you charge something on your debit card. You use your debit card to spend something, and the bank looks and says, "Do you have enough money in your account to cover it?"
Yeah.
Right?
It does.
It does. It does that exactly.
You have to have enough.
Yes, and the Federal Reserve, by definition, has enough in its account.
Yeah. See, wouldn't you like that account? But the thing is, you can't use it for your benefit. That's. I mean, it's,
Right? So
you'd have to do
if
it
they,
for my benefit.
if they write me
And
a
I'd have to
check,
do it for
do,
yours.
do they have any money in their bank account? No. Why would they have money in their bank account? They don't need it. Right? They want the money that they make out. So they
want
write
it
a
to-
check.
They want it to be used by us so that we can
Yeah.
function.
So I'm
in
a bank
society.
and they write me a check. I give them something that they think is valuable, or I think is valuable, and they write me a check. And they never had any money in their bank account, but their check is good because they say so.
That's one magic wand.
Right? So it is a
But
magic.
we're glad they have that magic wand.
It's a
We
magic
are
wand.
so glad they have that magic wand, aren't we?
Yeah. And so the Federal Reserve usually does this by buying and selling what is called sovereign debt or government treasuries.
Okay.
So these are
Sovereign debt.
bonds. These are bonds.
Wait. The Federal Reserve does the bond?
They buy them or sell them. They don't
But
print them.
But
That's the
fiscal.
that's fiscal policy.
we'll have to
But
look
once
into that.
they're out there,
Oh, they exist. So you know what a government bond is? I mean, we used to buy them for our kids for their birthdays.
yeah,
You'd spend. Anyway, you know what
they
a
come in.
government
They come
bond
in
is.
flavors.
Yes.
They come in a 2-year flavor and a 10-year
And
flavor.
they're different amounts,
and a
they'll
30-year
double or they'll
flavor.
go up by 25% or whatever, and it's guaranteed to go up by that much because the government backs behind it. And the government is, as much as we say the government is terrible because they're in so much debt, they actually honor their debts.
Well, they have no choice.
Well, there you go.
It's written in the Constitution. They have to pay their debt.
And so if you bring a government bond in, you're going to get the money for it. It's just, you're going to.
Yeah, they have to. Constitutional.
So government bonds are actually some ways some people use for retirement.
Yes. Your
My
stepdad.
yeah, he did that
He used to buy a 30-year government bond, or 1 or 2 or 3 a month. I don't know how many he bought.
for his retirement.
And 30 years later, they'd be paying, each of those bonds would be paying out $1,000.
Yeah, and that's how.
So if he
that's
bought one a week, he was getting $52,000 a year as they matured.
Yeah,
That was how he funded his retirement. And most retirement funds have a lot of government bonds sitting in them. A lot of insurance companies have a lot of government bonds sitting in them for exactly the same reason.
Okay.
Banks hold government bonds for exactly the same reason. They're sure, they give a nice, solid
You know what to
interest
expect,
rate. You know what to expect, yeah.
and you get what you expect as long as you don't lose them and don't turn them in.
So if the Federal Reserve buys a bond from you, say you're the Bank of Sarah D, and I'm the Federal Reserve, and you have a bond, and I buy it from you, I give you a check, and it's worth money, and now you have that money. And I've got the bond, and I stack it in a...
And you made that money.
It never existed. It didn't exist until I wrote the check.
So now you have the bond, and then what do they do with the bond?
I just set it there.
And you never cash it in.
No, I can. The government has to pay its bills.
But you don't cash it in.
I will eventually.
Oh, you will? Okay.
Yeah, when it gets to be 30 years old or 10 years old or 2 years old, however old it is, the federal government will send me money for the bond. Otherwise, they've violated the
Well,
Constitution.
no,
They
they'll
have
only
no
send you
choice.
money for it if you turn it in.
Yeah, I don't think that's exactly right, but that's okay.
I have government
No,
bonds.
you got Triple E savings bonds. They have a different story.
Okay, let's not talk about them
Yeah.
then. Okay.
But the deal is that yes, the
Okay.
government, those government bonds do,
They just pay. You don't have to turn them in.
yeah, they pay out. So and even
But then what does the Federal Reserve do with that money?
he gives it to the Treasury.
It gives it to the
Treasury,
which is not federal; it's fiscal.
Yes, they give it to the fiscal authority.
So,
Well, they also pay their bills, right? So
maybe it's an income thing.
right.
Money is a lot. There's a
And
lot.
you know
to
what
think
else?
about. No.
So let's say there's more. Let's say that I'm the Federal Reserve. I got some bonds.
Yes.
You know, and I just bought it from you for $200,
Yes.
and I go, hey, I'll sell it back to you for $150.
I might do that.
You might do that. Why
Why not?
Why not? All right,
Or
so,
maybe we'll do it again.
yeah, maybe we'll do it again. Yeah, I'll sell it back to you for $150.
Sure, I'll take that.
Yeah, so and then you give me a check for $150.
Yes.
Now what do I do with that check?
You rip it up.
That check gets shredded. It just disappears. So money just ceased to exist. It's not really shredded. I deposit into my bank account that doesn't have money in it.
So it seems like a magic wand, but it makes sense. Some might say it was a lot of math and science. Right? They
Yes.
might. So you can see it.
Yep, we're 22 minutes in.
I think that's
Almost
it.
23 minutes in.
I like that amount of time pretty much. So Dr. D and I, we are very much alike, and we are very different, but we're the same. One of the ways is, well, we're alike in that we both can't see it at a particular distance, but I can't see the numbers there. I can see there are numbers, and he can't see necessarily what I have written down if it's too close, but he can see far away, but I can see close.
But not
Yeah.
far away.
Not far away. We're all different and we're all the same. And it's when we complement each other with our differences that the world is a better place. So I don't need to encapsulate anything we did today.
No.
Next week we will continue along this vein and we'll get to the fiscal policy and inflation and easing, that kind
That's
of
what
stuff.
we're going to worry about. We're going to worry about inflation and bonds, and all of them are monetary policy and fiscal policy, right?
But we found out where
Yeah, but we got
Yeah,
the
a
understanding
pretty
of
good
how the
foundation.
Federal Reserve works and why the currency stays stable in value.
And why-
There's actually an agency out there that tries to keep it stable.
and that's its purpose.
That's its purpose. That's one of its
One of
purposes. It's
its
got two
purposes.
purposes. It's
Yeah,
got
two
all of two purposes. Yeah.
That's a good narrow focus because you got to be narrowly focused in
Yeah.
order to do something really well. That's what all the cool people say.
Yeah.
So thank you for joining us. We hope that this was enlightening and maybe, I don't know, maybe fun. I thought it was fun. Did you think it was fun?
Oh, it was a barrel of oysters.
Yeah. Yeah, smoked oysters.
Smoked oysters. Clear.
Thank you for joining us. I'm Sarah D.
I'm Dr. D. Namaste.
Make it a great day.